No one is coming to save your AI portfolio. Let me start with a scene that has nothing to do with markets. At least that is what it looks like at first. It is early morning. I am at the gym. My trainer has me in the middle of a program he calls 12 Days of Suffering. It is brutal. Heavy lifts, intervals, rowing sprints. The kind of workout where your lungs burn before you even hit the halfway point. On Wednesday, I pushed too hard on the rowing machine. The room started spinning. I stepped off and almost blacked out. I ended up on the floor staring at the ceiling, wondering if my legs would even hold me up. And my trainer looks down at me and says, "Listen, no one is coming to save you. Get your ass up." That line hit me harder than the workout. Because it was not just about fitness. It was about everything. And today, as we head into 2026, it is about your AI portfolio. No one is coming to save your AI trades. Not the headlines, not the hype, not the Magnificent Seven. If you are just buying any stock with AI in the press release, you are on the floor next to that rowing machine. You just do not know it yet. Think about some of the trades people rushed into this year. How is that Oracle position you grabbed in September working out? Still holding that once buzzy core weave just because someone on television called it an AI play? In a lot of cases, the answer is simple. It is not working. It is painful. And it is painful for one reason. There was no homework done. No real research. No real thinking about where AI is actually creating value and where it is just a story that sounds good on social media. The truth is this. If your entire AI strategy is buy whatever is in the news, you do not have a strategy. You have a lottery ticket. And as we head toward 2026, that is not going to cut it. Because here is what the Billionaire Playbook understands. AI is not just 7 giant tech stocks. AI is not just one chip company and one mega-cap software company. AI is a shockwave rolling through almost every industry. It is changing logistics, manufacturing, energy, data centers, cybersecurity, cloud infrastructure, even how old-school industrial companies schedule trucks and manage warehouses. That shockwave is going to show up as positive earnings surprises in hundreds of companies that are not in the headlines right now. In other words, if you keep staring only at the Magnificent Seven, you are missing where a lot of the next leg of AI gains may actually come from. So what does doing the work look like? Let us walk through 2 real-world examples. This is the type of digging billionaire investors and serious analysts are doing right now. The first example is a company almost no casual investor has at the top of their AI list. It is called C.H. Robinson. The ticker is CHRW. What do? They are a logistics giant, a company that helps move goods around the world. They are more than 120 years old. On the surface, they look like an old economy business. Trucks, freight, warehouses. But look at what changed. C.H. Robinson brought in a new chief executive officer, David Bozeman. He had spent time at Amazon in transportation. He had worked at Harley-Davidson. He had worked at Caterpillar. He understands operations. He understands how software and data can squeeze more profit out of each mile and each shipment. Since Bozeman arrived, C.H. Robinson has leaned hard into AI, not as a buzzword, as a tool. They are using AI to optimize routing, to better match loads and capacity, to reduce empty miles, to price freight more intelligently. Every small efficiency improvement drops straight to the bottom line. Here is the result. Despite a freight recession and a slow economy, C.H. Robinson stock is up roughly 55% this year. For comparison, Meta, one of the Mag 7, is up only about 11% in the same period. So, in the middle of a tough freight market, while many investors complain that the economy is not growing fast enough, this so-called boring logistics company quietly used AI to create real value. and the market rewarded it. That is what an under-the-radar AI winner looks like. It is not always labeled AI in big neon letters, but under the hood, AI is driving the profit story. Now let us look at a very different example. A company called Hut8. The ticker is HUT. For years, Hut8 lived in a very different world. It was a crypto miner. It ran data centers packed with machines hashing away hunting for digital coins. Then the AI wave hit, and a handful of people realized something powerful. If you already run energy-hungry data centers and you already negotiate power contracts, you have something incredibly valuable to the AI boom. You have power. You have infrastructure. You have land. You have cooling. You have the skeleton of what high-performance computing really needs. When Hut8 chief executive Asher Janut started hinting at big plans, the clue was not in some vague AI pivot press release. It was in the boring details. The company prospectus, its earnings call transcript, the fine print about its power pipeline. If you were willing to read that material and maybe make a couple of phone calls to industry sources, you could see what was building. A pipeline of AI infrastructure deals. Real long-term contracts. Real dollars. This week, that work paid off. Hut8 announced a 15-year deal valued at about $7 billion to provide power for high-performance computing at a 245-megawatt data center. The deal is backstopped by Google. And over the long term, it could be worth close to $18 billion. The stock exploded on the news, not because people suddenly discovered the ticker, but because the homework finally showed up in the price. Janut has already said more deals are in the works. At the same time, some other AI infrastructure deals in the market are under pressure. We are seeing strain at players like Oracle. We are seeing concerns around how some deals were structured with private credit players like Blue Owl. But Hut8? They just locked in a monster contract with a blue-chip counterparty. That is what a high-quality AI infrastructure pivot looks like. Now step back and connect the dots. On one side, you have crowded AI trades. Overvalued names. Companies bought simply because they are AI adjacent and in the news. People piled into them without understanding the balance sheet, the contract risk, or the actual demand. On the other side, you have under-the-radar operators like CHRW and pivot stories like Hut8, where AI is not a marketing slogan. It is a machine for improving returns on assets, for locking in long-term contracted cash flows, for doing more with the same trucks, the same power plants, the same racks of servers. This is where the bifurcation is coming in 2026. That word sounds fancy, but the meaning is simple. The AI trade is going to split. On one path, you will have AI stocks that disappoint. Too expensive. Too much debt. Too much hype baked in. They miss expectations. They blow up deals. They issue disappointing guidance. They get repriced lower. On the other path, you will have AI winners that surprise to the upside, not just in Silicon Valley, but in freight, in manufacturing, in energy, in data center infrastructure, in cybersecurity, in cloud tools. The billion-dollar question for your portfolio is this: which side of that split are you on? If your AI exposure begins and ends with the Magnificent Seven, you might be fine. Those are still incredible businesses, but they are also heavily owned, heavily analyzed, heavily priced. You are not going to find many true mispricings there. The odds that you are early and the market is clueless are very small. But in the rest of the market, across the other 493 companies in the S&P, 500 and beyond that, into mid-caps. And smaller names, there are AI stories that the crowd has not fully priced yet. That is where the Billionaire Playbook spends its time. Not just asking which AI hero stock can go up another 20%, But which overlooked operator could see earnings explode because they used AI to do something smarter, cheaper, or faster than everyone else? So as we walk into 2026, take that gym trainer line with you. No one is coming to save you. No one is coming to save your portfolio from AI complacency. If you chase every shiny AI ticker, the market will punish you. If you do the work, if you dig through the filings, if you study how companies are really using AI under the surface, you give yourself a shot at being on the right side of that bifurcation. Map this out on a whiteboard if you have to. Write down the obvious AI names. Then force yourself to find the less obvious ones. The logistics players, the industrials, the data center landlords, the power providers, the software picks and shovels that make AI actually usable in the real world. The billionaires are already doing this. They are not waiting for a headline to tell them where the AI trade goes next. They are building their own map. You can too. And remember, the market in 2026 is not going to reward AI tourists. It is going to reward AI students. People who took the time to understand where this technology truly creates cash flow, and who positioned themselves there quietly before the crowd. No one is coming to save your portfolio. But if you stop being complacent about AI, you might not need saving in the first place. This has been Billionaire Wealth Signals. So where should you actually look beyond the Mag 7? Here are 10 names worth studying. C.H. Robinson. Logistics using AI to boost margins in a weak freight market. Hut 8. Former crypto miner now locking in billion-dollar AI power deals. Caterpillar. Heavy equipment embedding autonomy and AI into mining and construction. Rockwell Automation. Factory automation getting smarter with AI control systems. Siemens. Global industrial giant integrating AI into digital twins and smart grids. Cadence Design Systems. Chip design software using AI to speed up workflows. Synopsys. Another EDA leader benefiting every time AI chips get more complex. Snowflake. Cloud data platform organizing the fuel. AI models actually need. ServiceNow. Workflow automation embedding AI co-pilots across enterprises. And Akamai Technologies. Edge computing and security adding AI to performance and cyber defense. These are not buy recommendations. They are examples of the homework you should be doing. Map out where AI creates real cash flow, not just where it creates headlines. That is how you stop being an AI tourist and start being an AI student. Thanks so much for watching today's Billionaire Wealth Signal. If you found these insights helpful, please give this video a like and share it with a fellow investor. Don't forget to hit that subscribe button and turn on notifications so you never miss a daily signal. We appreciate you being part of our community. See you in the next one.